Ron, welcome. Mostly people underestimated
Thanks,
the market this year, right?
Yeah, I think so. I mean, listen, you got to give hats off to Tom Lee, who's called every twist and turn in this market. And I haven't seen anybody, and Tom and I did a private event a couple months ago. I haven't seen anybody call the market like this since Bob Prechter did in the 1980s. And Bob followed the Elliott wave and used to call the Dow to within a point at the close on some days. And I think Tom's had it, pretty much spot on the whole year. And so I think, one of the things that's interesting on Wall Street, as the markets go higher, people raise their targets. They always hold out the possibility of a correction, as I have. And then you just kind of go with each twist and turn in the news. And I think the people who have been most steadfast, obviously this year, have had the best year among the strategists on the street.
Yeah, I'm trying to figure out from what portion of the year these targets that I have are. But it looks like even Brian Belsky, I mean, he pretty much was just a couple points off.
Yeah.
Anyone who was bearish was kind of way off. But you really have to take the most optimistic calls, and those were around the 4,800 level, and the market's just about 20 points shy of that. So I wonder how that sets us up psychologically for 2022.
Well, I think judging from the calls going forward, they are more modest, with respect to where we're going to be a year from now. And I think that's got some merit insofar as if Peter was right, when the Fed does have to do more work than we currently think. That's not my view, but if they do, obviously that's going to precipitate something of a more meaningful correction. And so I think, that's one of the big things in my mind that stands out as a risk factor for 2022. But I also think Main Street will be way more normal. I'm going to the old normal as my call for 2022 with respect to how the economy plays out. I think inflation dies down, growth slows a little bit, and I wouldn't be surprised if the Fed wasn't as aggressive as people currently think. And that's going to wreak havoc with people's forecasts.
Well, that's what I wonder. I'm just looking through the 2022 outlooks, and there's, Belsky's up there at 5,300. You got Oppenheimer, Wells Fargo, Credit Suisse at 5,200, Goldman 5,100, so a decent portion of people over 5,000. And the Fed is such a swing factor that maybe we look back to recent episodes and say, well, when they tightened, did that actually mean a lower stock market or a higher one?
It depends. There's this old rule by a technician that very well known in the 50s, 60s, and 70s by the name of Edson Gould, who created the 3 steps in the stumble rule. The Fed raises rates 3 times, you get a meaningful correction in the market. You could have one of those years like we've seen in prior periods where the Fed does tighten and then let up. So you get a dip into the middle of the year and then a rebound towards the end if the Fed takes its foot off the brake. And again, I think for a variety of reasons that might be the call. Because I think inflation will come down, supply chain issues will disappear or dissipate, and the economy will grow closer to trend. I read an interesting study the other day that suggested in post-pandemic environments, normal is actually the most frequent outcome, that everything goes back to trend line. Things don't really get blown out in the way you might expect. And so that's something that really grabbed my attention.
Hey, Ron, it's Frank. Happy holidays. You just hit on something that really kind of caught my ear. We were just looking at all the price targets and the average and the median. It's about 4.5% to 5.5% is the average median range right there. That seems like it's pretty bullish with the markets near all-time highs. And you just said, looks like the supply chain issues are over, but they're not 100% over. There's still Omicron. No. There's still also obviously inflation. Maybe are we being a little bit too optimistic about 2022?
I think anybody would be happy to get a 4% gain next year after, doubling in 18 months off the lows of March 2020 and then going to new all-time highs into effectively today. A 4% gain, when you think about it, would be a welcome pause, if you will, and actually a decent performance. And we're going also into the second year of the presidential cycle, which is typically not that strong for the stock market. So there are a lot of variables at work at this point. But again, I think it's going to be more choppy with maybe some downside, toward the middle of the year and then a rebound towards the end. But that is going to be, again, dependent on a lot of things. And Frank, you and I spoke earlier in the day. I think the biggest risk, and I know you guys are going to talk about this later, besides the Fed and the pandemic, should it run out of control, is going to be geopolitics. I think the Russia, China, Iran items that Kelly mentioned may be the biggest single variables we'll have to deal with next year. And again, I think Main Street is more normal than it's been since any time in 2019.